One of our plays completely exploded. We need to talk about it and what to do with it. Then we need to talk about some of our other plays and which plays are going to explode next. And of course, we're going to be talking about some new add money to plays. And the only thing that I ask in return is that you hit that ravishing like button. And also don't forget to subscribe. Also, quick warning, I understand that a lot of our plays are becoming quick winners and providing instant gratification. But at the end of the day, you still have to be willing to be patient when they aren't immediate winners. The key of being a good trader is identifying value, identifying something that's a good deal, and then buying it and waiting until you're proven right. It's not necessarily that stock becoming an immediate winner. I see a lot of people blowing up their accounts on winning positions. Why? Because they feel they're entitled to instant gratification. They feel they're entitled to immediate profit. That is not how the stock market works. The stock market is not a place for entitlement, and it never will be. A lot of our best performing plays actually had weeks where they lost and vomited up money. For example, when Mara sold off back here, we had a lot of people messaging me upset. They hopped off the bandwagon and then a couple weeks later it completely recovered. Why did they hop off? Well, because they bought blindly. They didn't actually believe in what they were buying. For me, I said buy the dip the whole time Mara was dipping, and now everybody thinks Mara was such an obvious play because it's been going up. But back in the day, nobody thought it was obvious. Everybody thought it was overvalued. In fact, when I first called it out way down here, people said I was a moron and I was pumping something because it's like, oh, it's already up so much. It's so much better when you put the work in and you have a clear plan and you don't have to panic every single time a stock goes down. Okay, so to start, our big winner today was EHANG. So yesterday, EHANG got beat down on a BS short seller report. It was just a complete massacre. And on this news, I put out a price target of $80. This was clearly undervalued and a clear overreaction. I actually think the whole short seller report was unfounded, but that's besides the point. And in last night's video, we talked about why and how this short seller report was BS, and I explained that this particular short seller has goofed up on many times, and this particular short report just doesn't really make much sense. We talked about how this was an excellent opportunity to dip buy, and we got a very nice bounce today, up over 55% at highs, and this actually went and hit my price target at $80. So shout out to folks who put the work in with us and bought the dip and then profited. This was a lot faster than anticipated. At the end of the day, oftentimes short seller reports take some time to actually reverse, but I think because of the massive scale of this overreaction, this was a great dip buying opportunity. Why was I so quick to bounce on this though? Well, first of all, generally the trend is with short seller reports, people panic first and ask questions second. So that means that the original panic is almost always met with a bounce. And that's what we saw, but more so it wasn't just that. It was also that I saw the value in this at $80. So even if this had kept going down to $20 even, God forbid, still it wouldn't have mattered because I saw this at $80 and that's why we put the price target out at $80. That way when something bad like this happens and a huge short seller comes in, you could say, okay, well, I see what they're saying, but I already valued it at $80. So even though everybody else is panicking and this is getting down to 40, who cares? This is an $80 play. So anyways, folks, this was a pretty good golden goose. I do want to congratulate any of you that caught this one. Let us know in the comment section below if you caught this one and what your plan is with the play. What I told ZipTrader you is that I won't be updating my price target on this, or upgrading my price target rather, because I see this worth $80. I think probably this ends up going back to 100 pretty soon, but at the same time, I see this worth 80. I don't really want to take on any extra risk, and that's why we had a price target at 80 instead of 100, because I see it valued at 80. Okay, next, ACIC. So ACIC is one of the plays that I took a long-term position in myself after they announced they were merging with Archer. Archer makes small aerial vehicles and they are under contract to deliver some to United, which will have them in use by 2024. It's actually funny, on Monday night I presented on this company and then Tuesday in the after hours ARK went ahead and bought it. At least that's when ARK went ahead and announced that they had bought it. But anyways, it was pretty cool to beat ARK to this. We were talking about this last weekend on Monday. But anyways, as traders, it's not good to seek validation from anybody, but when a big fund and established fund like ARK goes and buys something after we talk about it, it does feel good. Charlie is allowed to feel good, folks. It's not all just tears for Charlie. But nonetheless, as I said, this is one of my long-term holdings, and I have a price target of $45 on this play, and I'm going to hold it till it gets to 45. This little run in the after hours and today, it felt fuzzy and warm and all that good stuff. But I don't really care because I see this going to 45. Okay, next, RIOT. What a RIOT, folks. So yesterday I upgraded RIOT to a price target at $95, and that was after it hit our previous price target at 60, 65-ish. Today it broke into yet another new high. I believe it was up 30% at highs, which is just insane. It looks like it's running in the after hours too. These runs are insane, and I upgraded the price target because we see Bitcoin continuing to rally throughout 2021, and RIOT, I think, is one of the best plays for that. Mara, lovely Mara, I'm keeping my price target at $60. When it hits there, I'm going to designate it as a take profit play. But eventually we're going to have another Bitcoin cool off, so be prepared for that, to make sure that you've done your due diligence on these plays so that you don't panic sell and lose money on these plays that are probably going to go up substantially more. Don't be afraid to lock in your profits as we go higher and higher, but still, I see this having a lot longer to go. Okay, next I want to talk about Tilray. So this morning we talked about how Tilray was going to have earnings after hours, and to cap off a losing day, Tilray went and bounced massively in the after hours. This is all just noise though, folks. I understand people like to get caught up in the day-to-day movements, but at the end of the day, folks, I see this at $70. I don't really care what it does in the pre-market or the after hours or, any single day. I want this to hit my price target, and I don't care what happens before it hits the price target. Okay, next I want to talk about Palantir. So I said that if Palantir dips on earnings on Tuesday, that you should buy the dip. Well, it turns out that ARK actually bought the dip in that too. They went ahead and bought 1.5 million shares for their ARK W fund, which is really a sizable amount. And it's great to see our channel on the same wavelength as ARK, and I can go ahead and tout that we call things out before ARK, but I'm not going to do that. The point of the matter is that when value dips, you should buy value. I see PLTR at 55, so every time it dips, it's like, okay, an opportunity. I've also been hearing a lot of hysteria about the upcoming lockup period where insiders and holders of different classes of shares can go and sell their shares on the open market. Yes, that is definitely a potential deprecating factor, but my price target is 55, so if it sells off, who cares? Okay, next, CCIV. Another day, another CCIV rally. Still don't have confirmation on merger, and it's great to see this keep running up, but at the end of the day, I would still be taking some profits off the table. As of yesterday, we started hard recommending that you lock in some profits. Why? Well, because we started talking about this below 15 bucks. If you got an entry price below 20 or even below 30, it's time to take some profits off the table. We've already got pretty much everything we wanted out of it. Yes, this is certainly going to pop up a decent amount more if the merger's confirmed, but afterwards it's probably going to sell off, and then you're going to have another opportunity to dip buy it. So my take is there's no shame to lock in some profits. This has been a great trade and you should be proud of it, but don't be too greedy and keep everything in the position. People get mad at me for stressing risk because the all or nothing mentality is a lot more fun, and it's up to you to decide how you do your own risk management. I'm not there making the decision for you. I'm just saying you come to this channel because you want my opinion, so I'm going to give you my opinion. I have no idea how to catch all of the move or to time things perfectly, but that's not the goal, right? The goal is to do a good job of valuing things and then taking a chunk of the move. People always give me a hard time. They're like, oh, Charlie, you called something out, it went up 95%. But you could have only made 70% of that if I took your risk management. At the end of the day, I say things from my perspective. It's always up to you to make your own opinion and make your own decisions. But I think that it makes sense to be risk averse when it comes to a lot of these positions. I am not an all or nothing type of guy, and I never will be. Okay, folks, so now for the ticker of the day. So a lot of you guys have asked me for an update on Clove. Clove was one of the plays that we called out as a short seller hit piece, but it was also cooling off on the post-D SPAC stage because after SPAC hype, they tend to cool off and then they find a better floor and then people buy that up again and then the hype starts up again. And in this case, like I said, a short seller seized on the opportunity to further accelerate that trend. But bigger picture, I still see Clove at $20. The time to buy, of course, isn't when everybody is loving a stock, it's when people are freaking out about it, and I see this as a great opportunity. A few main things that I like about them: Clover gives really real healthcare savings. It's the fastest growing Medicare Advantage plan, and Medicare Advantage plans overall are a very largely growing market. Look into their PowerPoint, you'll find that a lot of their plans are going to make them a huge winner in 2021, even if they only hit on half their goals. So for me, we kind of go back to that thing where a price target tells you the bigger picture. I see this at $20. If it goes to $5, it doesn't mean that my price target changed. It just means that it's a cheaper deal. I don't think this is going to go to $5, but my point is that I see this at 20. Any dip is a buying opportunity. Okay, folks, I like you too much. We're going to do a second ticker of the day, SNDL. So a lot of you guys have asked about SNDL, and we talked about SNDL over the weekend, and they gave a big middle finger to their shareholders today, and they did a little bit of a rally in the after hours. This is the sort of thing that you can expect with penny stocks. If you want to dip buy a really good marijuana stock, I recommend Tilray. If you want to buy a more speculative but very, very high potential stock that would rally massively next time MJ starts rallying, well then SNDL is your guy. When we talked about it on Saturday, we talked about SNDL as an association play. It's going to run up massively in association with the rest of the sector once the rest of the sector booms. That's what we saw in the after hours, and that's what we're going to continue to see whenever the MJ sector starts booming again. So I think that if you have the stomach for it and you want to add some high potential, high risk reward sort of plays into your portfolio or into your trading, I would say that SNDL is a good buy. Let me go ahead and switch my shirt so we can do the outro. Go ahead and comment below what tickers you'd like me to cover in tomorrow's video or at the end of tomorrow's video, and I'll go ahead and cover that. And if you have any questions, feel free to reach out to us below as well. You can also join us on ZipTrader Circle. If you'd like to get some free stocks and sign up with a great broker, we do have a link to Webull below. If you'd like to learn how to trade, would like access to our price targets, our daily morning briefings, and of course our private chat, I'll go ahead and put the link to ZipTrader U in the description below. Of course, only join us if you're ready to put the work in. We don't want people joining and then not using the resources. Anyways, folks, have a great day, and I'll see you in the next video.